Welcome back to Simple Money Podcast, Canada's own personal finance podcast, presented in short and informative episodes. I'm your host, Matthew Seawick, also known as the Friendly Financial Coach. So one of the most current and controversial issues that the world faces right now is man-made climate change. Politics aside, the most commonly presented policy solutions are cap and trade, industrial incentives, and carbon taxes. In Canada, we have a federal initiative to reduce national carbon emissions. To achieve these targets, provinces are able to create an approved system of their own or are required to implement a federally prescribed carbon tax. The Canadian system of this carbon tax has two sides to it. The first is that there would be a tax on certain carbon-emitting goods and services. The other side is that the full proceeds of this tax would be redistributed. The majority of this redistribution would be given to households, and a small fraction would be given to other institutions and organizations. So fast forward to today, and we see 4 provinces where the federal carbon tax system is being implemented: Ontario, Manitoba, New Brunswick, and Saskatchewan. In very recent developments, the Saskatchewan government lost the lower level court ruling to reject this carbon strategy, which is already in the process of being appealed. Today, we're going to talk about this carbon tax and how it is believed to impact the finances of households. During this whole process, I'll also remain as nonpartisan as possible and just present the details of this policy. So first of all, what is a carbon tax? So the basic idea of a carbon tax is that there are financial penalties that match the costs of pollution. In economic theory, pollution is called a negative externality. A negative externality exists when consuming a good or service creates a negative cost on others outside of the market, and these individuals also receive no compensation. Therefore, the overall cost is actually more than the sticker price. This is where the carbon tax kicks in. The tax is supposed to increase the cost of certain activities to reflect the true cost of consumption, which includes the cost of pollution. Currently, the price that is being used for carbon is $20 per ton. So in theory, paying the full cost for a good or service will also act as an incentive to reduce our individual carbon footprint. Looking at how this tax works in Canada, there are 2 major components that the carbon tax targets. One is on fuel, such as gas, diesel, and natural gas, and the other is on the output of large industrial facilities. Some provinces have already implemented a federally approved pollution strategy, while others, Ontario, New Brunswick, Manitoba, and Saskatchewan, were forced to use the federal strategy. In this strategy, full proceeds from the carbon tax are returned. The bulk of the proceeds are given to individuals and families, and the remainder is paid to small and medium-sized businesses, universities, First Nations communities, nonprofits, and others that would struggle to adapt to the carbon tax. So how much do individuals and families get back? So the amount that is paid back to households really depends on a few factors, specifically how many people are in the household, their age, and their location of residency. This amount will also increase on an annual basis until 2022. It's expected that every year the cost of carbon will increase, so prices of these goods will also increase. So for example, in Ontario, each single adult that's 18 years or older is eligible for $154. Each next adult is then $77, and then an additional $33 for every child under 18. An additional 10% supplement is also available to families that live in rural or small communities. This means that a family with 2 parents and 2 children will receive a climate change initiative of $297 this year. Next year, it's expected that this amount will increase to $451. 2021, it's going to go up to $588. And then in 2022, it's expected to be $718 for a family of 4. So to receive this benefit, all qualifying individuals and families will need to file their income taxes. I talk about this a lot, and this is just another reason why it's important for households to file their taxes. So that's it for today, but this topic will surely remain controversial and will be increasingly debated in the run-up of this year's federal election. Thank you again for listening to Simple Money Podcast. If you have any questions or comments, you can email me directly at info@ffcoach.ca, or you can find me on Twitter at F_F coach. Take care and talk to you soon.